Bitcoin is pulling back just a little bit here. And if we look at Bitcoin, it's trading right at 105. So again, back down from 108. It was down to about 103, and it's floated back up. But remember,
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Gareth Soloway breaks down Bitcoin's future using expert technical analysis, offering insights into market trends and potential opportunities. Let's catch his analysis to uncover what's next for Bitcoin and beyond.
On the Fed, this is going to be a game changer, right? So you're either going to rally back up and get back up to this area here on the Fed, or it's going to flush and start to retest this 98 to 99,000. But so far, the 107, 108 level has been a good resistance. The question is, do we break, right? And when I say break, do we break here, or do we break out over here? So it's either a breakout with confirmation. It would have to get probably north of 110 for me to really believe it. Versus, and same thing here, we break below 98 and confirm, then there's trouble brewing for Bitcoin. All right, next up, let's take a look at gold. And gold, again, not much going on in the metals, to be fair. You can see flattish to negative, and that's to be expected, right? So we obviously understand that the Fed decision and the commentary will affect the U.S. dollar and rates and expectations and fear and greed and all these things, and those all play into what gold will do. So after the announcement, I actually expect a big move, but before the announcement, it's going to stay like this, most likely. The only thing I'd like to point out here, folks, is I love parallels, and you guys know them, and you can see how here, so this parallel from here to this low, and then from this high to this high to this high is perfectly parallel. In fact, I use the parallel tool here. One of the things to note here, look at this, guys. You have a little secondary parallel right here. So look how this low, this low, this low, and then you did get below here, but then look, kissed it, pierced it, touching it right in this range right here. And then again, so it just shows you that there's parallels within parallels. And believe it or not, a lot of times they're in a Fibonacci sequence. So there's a little educational stuff there. I don't really go into that a lot, but you do have one of those tools over here, which you can actually do a parallel with a fib using fibs within a parallel. And there is something to be said for it. I mean, it's amazing how that stuff does play out. The Fibonacci sequence does play out in nature, the rings on a tree, the flower, the petals on a flower, all these type of things. There's a reason why it works in the markets. It's subconsciously, whatever it is, within us, within nature, etc.
Bitcoin's funding rate, analyzed over the 30-day exponential moving average, EMA, shows no signs of late cycle overheating, suggesting that the cryptocurrency's current rally remains sustainable. CryptoQuint contributor Avocado On-Chain noted that this stability points to significant room for further growth. The lack of extreme froth in the market indicates that Bitcoin is far from reaching its cycle peak. Supporting this outlook, pseudonymous trader Rect Capital highlighted that Bitcoin has only just entered its parabolic phase, which historically lasts about 300 days. With this rally in its early stages, analysts believe the upward trend is likely to continue. CoinGlass data further underscores the stability, revealing a modest funding rate of 0.84% on Binance, signaling balanced market sentiment. After a period of consolidation between March and October, Bitcoin's trading volumes have surged since October, propelling its price momentum. Analysts remain optimistic, projecting substantial growth into 2025, fueled by increasing institutional demand.
If we look at the S&P here, one of the things that I'm kind of keeping an eye on the S&P is that the S&P has just been chopping sideways, and this potentially puts in a little bit of a short-term bullish pattern, right? So again, if we look at this as an up move, this is kind of your flag pattern right here. Here's your flagpole and then the sideways consolidation. It does open the door potentially for one more push up towards this trend line. We can see every time we've hit this trend line from the underbelly, it has been rejected. And you can see right here was the starting point. It was above, hit, bounced multiple times, went away, hit again, bounced away, and then chopped and broke. And I've shown this a lot, but I think it's so important to kind of take note of here is that this is resistance here now, resistance here, 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 and here each time we've had a pullback. Now, this latest move up, we didn't get to the trend line. To me, that shows a little bit of weakness. It shows a change in character in the market, and character meaning that every time it was hitting this line, right? So all of a sudden it didn't. But I still think there's a small possibility of us getting to that line. It's only about a 2% move up. But the kicker here is this, right, is to understand that you have a scenario building where tech starts to pull back, right? If we look at the NASDAQ 100 has hit a major trend line. It's been stronger than the market, right? So while the S&P hasn't been making new all-time highs, the NASDAQ has, right? Really just up, 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 up. Small pullbacks along the way. But we finally achieved that level on Monday, pulled back on Tuesday. Today, tech is basically neutral to positive, but we'll see again where it goes on the Fed decision. All right, silver down ticking a little. This is a big level on silver. Again, at some point, this pattern favors a breakdown. Don't know if we'll get a bounce first, a little bit of a bounce, then the breakdown. But probability-wise, silver is still in a bearish consolidation pattern. And then if we flip over to oil, this is a great example of the methodology that I teach, guys. So here you have a short-term trend line, high pivot to high pivot to high pivot. It breaks out, doesn't confirm, confirms. And then look at how yesterday it flushed below. But once you confirm above the line, this becomes major, and it's very rare that it's able to get back below so easily. By the end of the day, it's up, and then today, or up off above that line, I should say, still down on the day, but then today moving right back up. And again, probability-wise, which is never 100%, but we know it favors it, you would expect a move up on oil here. Okay, and by the way, that's a shorter-term move versus my long-term bias on oil is still very, very negative. Lastly, let's just take a quick look at natural gas here, folks. Nat gas is pausing today. It still is holding this major technical line here. So again, you have this support and this resistance. If this breaks, eventually I think you go here. And then if you get up here, I'm not gutsy enough to short there, but you could break, if you break out above that line right here, there's a gap fill going back to 2023. Looks like January of 2023 at around 430. What is that? Around we'll call it 440 on natural gas.
Ethereum's price is on the verge of breaking all-time highs, showing impressive momentum as it eyes new benchmarks in the coming days. Rising to a year-to-date high of $4,108 on December 16, Ethereum has surged 8% over the past week, marking a 28% increase over the last 30 days and an 82% gain over the past year. Currently trading near $4,000, Ethereum is just 18% shy of its record high of $4,891 set in November 2021, sparking bullish optimism in the market. Daily trading volumes for Ethereum have jumped by 30% to reach $42 billion, highlighting strong demand and robust momentum. On-chain data adds to the bullish narrative, showing that Ethereum balances on exchanges have plummeted to an 8.5-year low, with just 9.2 million Ethereum available, a nearly 10% decline over the past year. This decrease is attributed to a rise in withdrawals since October 2023, coinciding with a 73% surge in Ethereum's price. Whales have also intensified their accumulation, now holding a record 57% of all circulating Ethereum, a long-term bullish indicator. Institutional interest is surging as well, with Ethereum-based exchange-traded products, ETPs, recording inflows for 7 consecutive weeks, totaling $3.7 billion. This momentum, highlighted by a $428 million inflow on December 5 alone, signals a dramatic improvement in investor sentiment. Spot Ethereum ETF have also gained significant traction, adding $854.8 million in the week ending December 13. Technical analysts point to Ethereum consolidating within a triangle pattern over the past 3 years, setting the stage for a potential breakout. Some projections place Ethereum's price target at $15,000 or higher by 2025, reflecting parallels to the explosive growth seen during its 2016 to 2017 bull cycle. Optimistic scenarios extend even further, with estimates ranging between $15,000 and $25,000. However, more conservative analysts suggest a cycle top around $6,000, underscoring varying expectations in the evolving market. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.